and the onslaught of earnings season. What should we expect for the markets? Guy?
Let's look in the rearview mirror. You just said it. I mean, to me, the most concerning thing is the weakness of the dollar. But back that out and look at an S&P 500, which is now down, what, maybe 9%-ish from its all-time high, maybe even less than that, which to me, given this backdrop, is a bit of a win. So the S&P hanging in there like a champ. I'm concerned about the U.S. dollar, but tariffs, no tariffs. I think the question one has to ask is, are earnings going to be as robust as the market hopes? And I don't think they are. And you've brought this up as well. And what's the right multiple, the environment that we find ourselves in? And I think the market's still a little expensive here.
Especially as a list of companies suspending guidance, not giving guidance. It gets longer by the day as earnings season chugs on. We had it from UPS. We had it from GM. No guidance. So how do you value the market?
So it's a great question, and I'll tell you, we went through all of our models the day after the Rose Garden tariffs, and we basically baked in a stagflation scenario with inflation kind of in the mid-3s and GDP of 0.5% on the year. It basically, tells me kind of 53, 51 is a reasonable place to end the year. So I feel like we're fairly valued based on that scenario, and we did hold within the 20% drawdown range, which is a growth scare, not a recession. If we get recession fears, we've got another big shoe to drop, but I think the market is kind of fairly valued where it is right now.
I think the next 100 days have a lot less volatility. And I know that may seem obvious. Maybe it doesn't seem obvious because I think there is still so much uncertainty. And I said this yesterday, and Rebecca Patterson pushed back a little bit, and it's fair to have done. I said, I think we're kind of through the worst of the detox phase. And what I meant by that is I actually think the economy will weaken. I think there are headwinds around margins and multiples for the stock market. And I actually think we're at some point going to go lower. But I do think that the news flow out of the administration in terms of that detox phase, that was a phase of policy. I think we're now going to get more into, I think as we talk about the next 100 days, we're going to hear a lot more about deregulation. I think we're going to hear a lot more about tax cuts. I think we're going to hear a lot more about things that at least will elicit that animal spirits reference that people in the markets were saying. I still think we've got some significant issues for the economy and as a result of tariffs that are uncertain and damage that's been done. I'm not trying to sugarcoat that, but I think we're talking about the next 100 days. And I think this administration on some level, I know it's crazy to say that, is almost moved on. Like, I think, they're talking about where they're cutting deals. We heard some of that today. Who's done a deal? Maybe the nameless country. But I do think you've got a case where there are things that will be coming. And I look at markets and I think as long as the VIX is in the mid-20s, if we're heading down to even low 20s, I think the pain trade remains higher.
More deals, more carve-outs, more exemptions for U.S. companies on the tariff front.
Yeah, I don't buy any of that. Yeah. I think the next 100 days has the potential to be far worse than the first 100 days.
Well, what's worse? I mean,
can I finish?
Sorry.
Okay.
So we're just saying,
Steve, listen.
Go ahead.
Or Tim, sorry.
Go ahead.
Okay, the first 100 days, they're dismantling all of this infrastructure which has existed, right? They're putting people in place that are there to dismantle the organizations in which they're there to cover, right? So we've had this sort of chaos. We've had this kind of policy rollout. A lot of it actually hasn't been instituted. The uncertainty in and around trade and tariffs is not going away in the next 100 days. They can continue to carve stuff out. They can continue to kind of jawbone stuff, but companies are telling you something different, okay? Now, if you want to talk about valuation, you want to talk about all this stuff, listen, the glass half full is that the 10-year yield is at 4.17. The dollar, the Dixie is still at 99, right? And so I don't really care about the VIX right here. I think you keep an eye on the dollar and on the 10-year yield. I think they're going to tell you what equities are going to do. But the other thing that's going to tell you, again, what equities are going to do is all this guidance that we're getting. And it may be fine right now. Like, it might be fine. We keep hearing about this pull forward. So Q2 might be baked in the cake. It might be fine. What's the outlook for the back half of this year look like? And I just don't think we're going to get the sort of bilateral agreements. Look at what happened in Canada last night. I don't think Mark Carney's running down here to do a deal right now. I think he has a little bit of a mandate. If we can't do deals with our allies, then we're certainly not going to be able to do them with China. And I think that's what keeps things volatile over the next 100 days.